Okay, so we have question variance analysis. This is F2 level question, okay? So required, calculate all possible variances. So from this question we can find all variances, the labor, the material, the overheads, the fixed costs, the sales. We have a XYZ company uses standard costing system. Below is standard cost card for product itself. What is standard cost card?
First, production overhead also included in this cost. Variable as well as fixed.
What is standard cost card?
Standard cost card.
The list of the chart of our costs.
Yeah.
Material, labor, all the things.
So it includes details of cost of a product. Okay. So standard cost card. So we have direct material. The product uses direct material 4 kgs, that's $5 per kg. So total is 20. If you take 4 multiply 5 becomes 20. We have direct labor, which is 2 hours at $8 per hour, which is 16 per unit. Yeah. We have variable overheads 2 hours. Remember I told you variable overheads will be based on labor hours. So whatever is the hours of labor will be the same hours for variable overheads. Okay. If hours is not given, if I remove this as well, you should know that this is 2 hours. Okay, because variable overheads will be based on labor hours. And then total overheads is 43. Variable overheads. Then we have fixed overheads, which is 2 hours at the rate of 7, which is 14. So this is our OIR. Remember, $7 is our OIR, overhead absorption rate. So 43 plus 14 becomes 57 total cost. And then we have a selling price of 70, so we make a profit of 13. Okay. The budgeted production, output and sales is 1,000. So we budgeted to produce and sell 1,000 units. Now below is the actual data. I think I should take this above. Actual production was 1,300 units and actual sales was 1,250 units. So actual cost, so this also has a trick, 1,300 units and 1,250 units. Why are they different? So it is a trick. So we have actual cost, direct material 5,000 kgs at 22,700, direct labor 2,850 hours at 21,500, variable overhead, C hours is not given for variable overheads. Why?
Because it's based on labor hours.
Yeah, to 7,800. Fixed overheads is 14,600. And sales revenue is 1,250 because we only sold. Remember, the trick is that these are the costs. These are the cost of 1,300 units. But this is the sales revenue of only 1,250 units. So when we consider these terms, we consider 1,300 units. But when we are looking at sales variance, we are looking at 1,250. Okay? Does it make sense?
Cost of production just it should be 1,250 units cost.
No. Cost of production is 1,300. We should look at the cost of 1,300 units, but we should look at sales revenue based on 1,250. I will show you. Remember the first variance that we had was material variance. And material variance, we had total variance, total material variance or material cost variance. So we want to know whether total costs us more or less. So we look at standard, yeah? Standard, how many units did we make? 1,300. Budget was 1,000 units, but we made 1,300 units. Remember there is 1,250 units as well. But when I'm looking at the cost of production, I look at the production units, not the sales units, okay? Let me write here. Consider production units, not sales units, which is 1,300 units, yeah? Not sales units, which is 1,250 units. Does it make sense? should point there. So we have standard, according to standard, yeah, per unit. I said per unit. Should cost us $20, yeah? So we multiply by 20. It should have cost us 26,000, but actually, if you look at the actual figure, how much is it? 22,700. Yeah. So it costs us more or less. It costs us less. Yeah. If it costs us less, it is favorable. So we have a favorable variance. How much? Let's use calculator. 26,000
300.
minus
3,300.
3,300. Fair. So product cost us 3,300 less in terms of material than it should have. Now there are two reasons it cost us less. This is further division of this total. It is price and usage. Either we bought it cheaper or maybe we use less, or maybe both of them. Okay. So according to standard, 1,300 units. How many kgs did we purchase? Remember, we are considering what? Price. So take kgs purchased. There will be two kgs. Kgs purchased, kgs used. So when we are talking about price, what do we purchase? What do we pay for? What we purchase, not what we use, yeah? So when we are talking about purchase, we will use the kgs purchase, okay? So we have 5,000 kgs purchased. Sometimes this kgs purchased and used is different. So when we are talking, this question doesn't have it, so I'm making you prepare for other questions that might come, okay? So when there is two kgs, kgs purchased and kgs used. When we talk about price, we pay for purchase, no matter how much we use, okay? So the 5,000 kgs that we purchase and use is the same. According to standard, we should have paid 5, yeah? 5 per kg. That makes it 25,000. But actually, we paid how much? 22,500. So we have favorable. How much favorable? 2,500. So we saved
2,700.
700. So 300, 200, 300. So we saved 2,300 by buying cheaper. Okay? We saved 2,300 by buying cheaper. Does it make sense? So we saved overall 3,300 on total material. Okay. Next is usage. So how many kgs did we produce?
1,300 units.
So I'm going to write here, take kgs used here, okay? So 1,300 units were made. We are not going to take 1,250 because they are sales. We are talking about cost of production. So each unit should take how many kgs? 4 kgs each. So according to standard, we should have used 5,200 kgs, but actually we used 5,000 kgs, which is favorable 2,000 kgs, 200 kgs. Now this is kgs. If I multiply it by price, which is 5, it gives me 1,000. Okay. So 1,000. So adding both, 2300 plus 1000 gives us 3300. Okay, so we saved total 3300 on material, 2300 because we bought cheaper, and 1000 because we used less. Okay, so we saved on material in two ways. या अर्जान खरीदे या कम इस्तेफादा करें. Okay, both of them will lead us to less cost. Okay. Next is labor variance. What I'm going to do is delete this, copy this, just wanting to show you that how similar these are. So I'm going to take kg units produced, okay, because this is the cost of production. So we have total material, here we have total labor, or material cost or labor cost variance. So looking at total, how many units did we produce? 1300. What should be the cost per unit in terms of material? 16. Oh, per hour per unit in total.
16.
So 16. See, I'm just changing a few things. So it should have cost us 20,800, but it actually cost us 21,500, which is more, yeah? Which is adverse. 1300. Now, in exam, what they could ask is, what could be the reason of this? Maybe we paid higher, or we used more hours, okay, or our efficiency was not. So overall, we spent overall 1300 more on labor than we should have. Okay. Two reasons. Material price becomes labor rate. Take kgs used, kgs purchased. Here say, take hours paid. There is hours worked and there is hours paid. Okay? So we are going to take hours paid. When we are talking about payment, we are talking about hours paid. Sometimes hours paid is more than hours worked because of the idle time and stuff. Okay? So, how many hours did they work? So in this question, this is same. Just like kgs, hours paid and hours worked could be different. So 2850. 2850 multiplied by rate per hour is 8. Yeah? This is how much we should have paid for the hours paid. 22,800. And what did we actually pay? 21,000. So actually we paid less. Yeah? We saved on payment. So that means 1,000 saved, yeah? We saved 1,000 by paying less. Does it make sense? So that means the hours is used more. We paid less, but the labor was inexperienced, so they wasted time. How much time wasted? So 1300 units should take 2 hours per unit, yeah? It should take 2600 hours, but it actually took 2850 hours, yeah? So 250 hours more, so adverse. But this is in terms of hours. No, like a kilo Okay, multiply by 8. So 250 multiplied by 8, 2000. So 2000 adverse. If we take, so it doesn't balance. It is not correct. Total is 1300, yeah? This is 500, not 800. This one is 1300, yeah? 1300. No, 700. Just use calculator. 22,800 minus 21,500. 1300, yeah. 1300 favorable. And 2000 adverse. Yeah? So 1300 favorable plus 2000 adverse. Minus. Gives us 700 adverse. The top should also be 700, yeah? Let's see. 1300 multiplied by 16. 20,800. Actual is 21,500. Give 700. Kick off this is yeah? I think we should use calculator. Okay? Use it, there is no problem. So we have 700 adverse. So conclusion, we saved on paying for cheaper labor, but it resulted in inefficiency. Which resulted in cost being spent more on efficiency than saved on grade. Okay, means we paid for lower grade labor, so we thought, well, it wastes a lot of time. Okay, that time costs us a lot of money. Doesn't make sense. It's like you have a carpenter. One carpenter asks 2,000 per day, another asks 1,500. Okay? But one does it in 1 day, the other does it in 2 days. Okay?
2 days.
So you give one, it will take 2,000, and you give to other, it will take 3,000. Okay? Labor or variable overheads is very similar to. So in a 5 level, you need to understand linking variances is important. Okay, they will ask you why is total variable, why is it adverse? Then you have to give comment. Okay, so comment like this. Variable overheads is very similar to labor. Okay, so just like previous, total variable overheads or variable overhead cost variance. So what is per unit? In total we are looking at per unit 7. So 7 per unit would mean 9,100. But actually we have spent 7,800. Okay. So 7,800 means we have spent 1,300 less. So favorable. Okay. So we have spent 1300 less on overheads than we should have. So we have saved 1300 on variable overheads. Then instead of labor rate variance, we have variable overhead expenditure. Now, when there is, see, common sense. When labor is working, there is overheads. When they're not working, there are no overheads. So take hours worked. Does it make sense? You are making payment to employees whether they are working or not, if you are making payment based on time. But they are only incurring overheads if they are working. Does it make sense? So take hours worked. Okay? So, because OHD only incurred when there is production. Okay? Or any work if it is not production. So in this case, our work, our pay is the same. So we have 2850 hours, which is 3.5 per hour, yeah? So it should be 99.75 standard. But actually, we incurred 7,800, yeah? So we incurred less. $21, $25. So we save $21.25 by incurring less overheads per hour. Okay? It would be, for example, telling your labor to turn down the heat. Yeah, AC ra kam karna, yeah? It's something like that. Then, if variable overheads is based on labor hours, then the more hours they are working, the more will be overheads. I will give you an example of a class. If you are teaching a class and there is a teacher you hire, the more classes he teaches, the more will be the overheads. Electricity, heating and everything, yeah? So the same thing is here. So the more time the employee takes to do something, the more will be overheads. In previous one, I didn't change this to material. Labor, this is labor efficiency. Okay. Take hours worked. And this is the same thing. Okay. Labor efficiency, or we don't call it labor efficiency, we call it variable overhead efficiency. So take hours worked in both cases. If there is no work, there is no overheads. So if variable overheads is based on hours per unit, then hours per unit both for labor and for variable overheads is the same. Up to this point, this is the same. The only difference is we multiply by 3.5 here. If this is adverse, if labor efficiency is adverse, variable overheads efficiency will also be adverse because it is based on labor hours. Okay? The only difference is that the rate is different. 875. So we have 2175 variable minus 875 adverse, which is 1300 variable. Now what will be the comment? Even though our variable overheads per hour is less, we spend more hours, which resulted in overheads being charged more. Okay, but the overall saving on charging less is more than overheads spent on more hours worked. Okay, so even though we charge less, but because labor was working lazy, we worked more hours. Because of that, we have adverse variance. But the adverse is less than the favorable. So that's why we have overall 1300 saving. Okay, does it make sense? Then we have fixed overheads. Fixed overheads is a little bit complicated. Okay. Do you remember in absorption costing we had under over absorption? Yeah? Under over absorption is the difference between our overheads and the actual overheads. It is two reasons, yeah? So first let's look at that. So we look at actual overheads, yeah? Actual overheads fixed is 14,600. And then we have absorb. So we absorb overheads based on units, yeah? How many units did we produce? Not the units sold, units produced. So 13 multiplied by 14, yeah? The rate was 14. 14 per unit. So absorb is 18,200. So we have adverse, yeah? Because absorb is more. Yeah? No, it is favorable. Absorb more means we have charged more, but actual is less. Okay? Absorb means budgeted. Actual is actual, so actual is less. So if actual is less, it is favorable. Yeah? If it is on the top, it doesn't mean it is. मतलब मंगा दासी कैलकुलेट का होगा ना मख्य दे द बारे में तो चेंज कर दिया जनो या मिशा ऊपर ही so absorb means budgeted, okay, because this rate is based on budget. So actual is less. So we have over. If you remember, what do we do with over absorb? We add it to profit, yeah, or we deduct it from cost. What do we do with under absorb? We deduct it from profit or we add it to cost. So over absorb is deducted from cost, added to profit, so it is favorable. So over absorb basically means overheads is less than expected. So we have favorable. Does it make sense? OHD less than expected. The recording now goodness test plus teacher now. Okay. This is very complicated fixed overhead. And I haven't studied it from books, I understand it. Because I've taught it, I know the links. Okay, so over-absorb means we estimated more overheads, but actually it was less. If you remember, it was because of two reasons. One, budgeted overheads is not the same as actual overheads. Budgeted activity is not the same as actual activity. So then we have overhead expenditure variance. Fixed overheads expenditure. So in expenditure, what do? We look at total budgeted overheads. Overheads means fixed. Total budgeted was how much? Per unit budgeted is given, but total budgeted is not given. But if you take per unit budgeted multiply by units, you can find how much was total, yeah? Not the actual units, the budgeted units. It will give us 14,000 total budgeted overheads, but actual. So in expenditure variance, we are not looking at per unit, we are just looking at total. So this is given per unit. If it was not given per unit, it was given total, I would have taken total budget compared with total actual. There's no need to look at per unit. 14,600. So this is overheads expenditure. So we have adverse. Okay. And remember, in marginal costing, this is the only fixed overhead variance. It doesn't believe in fixed cost per unit. It only says what was the actual fixed cost and what was the budgeted fixed cost. Another reason was production volume. So we have fixed overhead volume, okay, which is production volume, which is budgeted activity not being equal to actual activity. What was budgeted activity? Budgeted activity was 1,000 units. What is actual activity? 1,300 units. We are talking about production. So we have 1,300, favorable or adverse? Favorable. Remember, the thing about fixed cost is that the more the units, the less is the cost per unit. So multiply by cost per unit, which is 14, gives you 300 multiplied by 14, 4,200. Okay. So we saved 4,200 on producing more units. But overall, in total, we incur more overheads. So if we take both favorable and adverse, it gives us total under overabsorb. Okay. Now the explanation of this is very important, because units is more, cost per unit is going to be less. Okay. More cost is adverse. Okay, more cost. But the units one is difficult to explain. Why is more units favorable? Because the cost per unit is going to be less, as fixed cost reduces per unit. This is what you study in F2. Okay. Now, production volume, if you remember from F2 labor chapter, there were three ratios. Production volume is the total units produced. Total units produced is based on two things: capacity and efficiency. Capacity says how many hours did you work, and efficiency says how much time did you take. The more hours you work, capacity, the less time you take, efficiency, the more the production. The less hours you work, capacity, the more time you take efficiency, the less the production. Okay? So let's look at efficiency. In fact, you can take this efficiency, this one. It is the same question, that's why I can take it, okay? Don't take it from another question. So, don't call it labor efficiency, fixed overhead, volume efficiency. Okay. Bitta Swami. On film over there, Bitta Swami, brother. The Daman. Munam ke barish mein hai. Awal fixed with Bozura divides with Bozura the Dinka divides. Fixed overhead volume capacity. The fixed overhead volume was the volume efficiency. So efficiency, take the same. So 1300 units should have taken 2 hours each, 2600 hours, but they took 2850 hours, which is 250 hours more. So more hours means less production. So we are not going to multiply by labor hours. We are going to take the fixed overheads per hour. Fixed overheads per hour is 7. In this chapter, fixed overheads is also going to be based on labor hours. So 250 multiplied by 7. I'm putting dollar sign. It doesn't work here. 1750. Adverse. If efficiency is adverse in labor, it is going to be adverse in variable overheads. It is going to be adverse in fixed overheads, because we are going to take the same hours. These hours are going to be adverse. Only the difference is going to be the rate that we are applying. Okay? Does it make sense? Next is fixed overheads. Volume capacity. So I'm not going to use the term standard. I'm going to use the budget. Usually means total, but budget and standard means the same thing. Usually they mean the same thing, but to be specific, standard means per unit, budget means total. From standard we make budget. So how many hours were budgeted? Total hours budgeted. Not given. But if we take units, multiply by hours per unit, will give us. Budget is 1000 units, multiply by 2 hours per unit, which is 2000 hours budgeted. But actually, we took how many hours? 2850. It's given. So we have favorable. Remember, in capacity, more is good. In efficiency, more is bad. So it basically means we worked 850 hours more. Okay? Now multiply this by rate per hour. Which rate? The 7. Okay? So it becomes how much? Let's see. 850 multiplied by 7, it becomes 5950. Okay. This is favorable. This is adverse. Now let's see. 5950 favorable minus 1750 adverse gives us 4200 volume favorable. Yeah? So collective of these gives us volume, and then both these gives us total. Okay, which is 3600. We have 3600 more fixed overhead costs according to absorption costing. The reason is spending 600 more and saving 4200 on producing more. So we have overall 3600 saved. And this volume is more or less because of two reasons: the efficiency and the capacity. Efficiency is adverse because we work slower. So we have spent 1750 more on efficiency, but we saved 5950 on capacity, which is more than what we incurred on efficiency. So the overall 4200 favorable on volume, and then both of them combined gives total. Okay. Next is sales volume. Remember, in marginal costing, this is the only variable fixed overheads that exists. Okay. Marginal costing doesn't believe in fixed cost per unit. It only believes in fixed cost in total. Okay. So sales, one is price variance. So now we take 1250 units sold, which is 1250, not units produced, which is 1300. Okay. Okay, in price, we say, did we sell it expensive or cheaper? So according to standard, the units that we sold, how many units are they? 1250. We should have sold each of them for 70. Yeah? Which is, we would have earned 87,500 revenue if we had sold them at the standard price. But actually, we sold it for 85,000. So we sold it for less. Yeah? To adverse. Now this should result in favorable volume variance. If price is less, if this is adverse, it means we sold it cheaper. If we sold it cheaper, that means demand should be higher. Yeah? It can be higher, it can be, but this is what theoretical, this is how they are linked. Okay? 2,500. So, adverse. We have sold it for, because this is revenue, less means adverse. Okay, we could have earned a revenue of 87,500, but we earned revenue of 85,000, which is 2,500 less. Okay. Next we have sales volume. Okay. So in sales volume we say what was the budgeted sales, which is 1,000 production and sales, and actual sales, as you can see, it is a favorable. Yeah. So we have favorable 250. Yes. Now, if I take this and I multiply by profit per unit, which is, in this question, how much is it? So multiply by 13. Let's use calculator. 3250. Now this will be called sales volume profit variance, and this is according to which costing, marginal or absorption? Absorption, because absorption costing believes in profit per unit, marginal costing believes in contribution per unit. Profit comes after contribution. So after fixed cost per unit has been deducted, yeah? But marginal costing doesn't believe in fixed cost per unit. If it was, it is not two parts, it is just one thing, but two different ways in two costing systems. So then we would have sales volume contribution variance if we multiply this by contribution. How much is contribution? 13 plus fixed cost. The easiest way to find contribution is take fixed cost plus profit. Gives you contribution. And contribution is higher than profit. So 250 multiplied by 27. 67.50. Okay. Favorable. We have earned 2,500 less by selling it cheaper, but that resulted in sales units being more. And according to marginal cost, absorption costing, we earn more, 32.50. According to marginal costing, this will be called sales volume contribution. According to marginal costing. So even though we sold units cheaper, that resulted in less revenue than we should have earned. But because we sold it cheaper, our sales volume was more than budgeted. Okay, that resulted in more earning than revenue lost in selling it cheaper. Okay, does it make sense? Even though we sold units cheaper, that resulted in less revenue than we should have earned, but because we sold it cheaper, our sales volume was more than budgeted. That resulted in more earning than revenue loss in selling it cheaper. Okay, see, the overall effect is that we have 2,500 negative adverse, if I'm talking about absorption costing, but we have 32.50 saved. Okay, 750 more revenue earned. And if we were using marginal costing, then it would be 67.50, which is 4,200 more. Okay, according to absorption, according to margin. Does it make sense? Yeah? So this was your basic variances. Remember, in a 5 level, it is not important just to calculate it. What is important is understanding the meaning. Okay? So these basic variances will not come as much. The advanced will come, but to understand the advanced, it is important that you know the basic as well. But still, a question or two could come. Does it make sense?